Welcome back, everybody. This is your boy BlockchainCrusader here. We're going to be talking about Bitcoin and is this the bottom for the crypto market? Massive indicators are popping off right now for Bitcoin, indicating that we could have a massive run here. You know, whether it's going to be short lived, whether it's inflated or it's artificial, we're about to find out. So let's dive in here, guys. Let's see what is going on. So what's happening? Bitcoin's been having a small move here, right? It's up to 19,000. It was up earlier, over 5% earlier today at over 20,000. It's come back down a little bit since then. If we look at the charts over here on the daily, you can see my hurricane projectile spaghetti strings. And so far, it's been taking this path, right? We're moving higher up, trying to take this point of control and move up into this upper band. Are we going to reach this upper band? Some people are saying that we can reach 22,000 plus. That would literally make us break out of this downward regression trend and maybe even create a new regression trend on the upside. Is that going to be possible? I don't know. We're going to be seeing that. This is the daily. We have a long way to go before we get there, right? Right now, we're currently experiencing a small pullback. But let's see what these indicators are. The first off, and the easy one, I covered this the other day, was 34,000 Bitcoin were moved off exchanges in a single day, with a total supply of about 60,000 were moved in 3 days, 34,000 of those being moved in 1 day. This happened on September 30th, literally about 4 days ago. And a massive move like this hasn't happened since June 17th. And when it did, Bitcoin moved for almost 22% in the following weeks. We also know that we've got the midterm elections coming up here in the next couple of weeks. So could this be the setup? I don't know. But this is just one of the indicators, right? Bitcoin supply being moved off exchanges. Massive. But let's get into the heavy stuff here. The heavy stuff is these four on-chain metrics. This is what it's showing. So let's get into it here. The first one is hash rate is making a new all-time high. And you must be wondering, why is hash rate important? It's simple. The more hash rate there is in the network, the more secure Bitcoin is, the more safe, and it shows that there's bullishness towards the miners, right? The miners are making profit on their mining capacity, because if not, they would have to turn off, right? They have electric bills to pay. So if they're making money off Bitcoin mining, they're going to be making more. They're going to be increasing the hash rate on the network and trying to put as many machines as possible to work. So the increase of hash rate is always very positive for the market. And you can see the chart here, right? When we had this massive drop in hash rate, we had a massive drop in price. As the hash rate started to come back up again, Bitcoin's price started to come back up again. And since it's dropped off, we've had kind of a steady double top here where we're coming right back up, and the Bitcoin's price is still down here, but the hash rate has been continually increasing. So somebody knows something is being set up here. So let's keep moving forward. The next one is the hash ribbon. As you can see here, it's these two ribbons, the green and the blue. Every time the green has crossed below the blue, we've seen a massive price drop, and we haven't seen an increase in price until there has been a crossing to the upside. We rode it out. The green hash was on top of the blue this whole time. We were kind of riding up the Bitcoin price, and then boom, we crossed over, massive drop. Now we've crossed back over, but the price has not started to recover yet. So we could see that this could lead, obviously it's a lagging indicator, this could lead to a recovery in Bitcoin's price here. So is the price in? Here's another indicator. Apart from the hash rate, the Bitcoin accumulation levels also reached a 7-year high. CryptoQuant data shows that 6-month-old and older Bitcoins now make up 70% of the realized cap. During the 2019 and 2015 bottoms, this score sat at 70 and 77 respectively. So you can see here the 2015 bottom was 77%, 2019 bottom was 70%. We are currently at 74% in October of 2022. And you guys also got to remember, the bear markets felt like forever, and the top of the crypto market was October, November of last year. So we've been in here for almost a year. So taking that into consideration, we could be getting ready for a rally. There's a lot of other macroeconomic situation happening. Also political stuff, like I said, with the midterm elections coming up here in the next couple of weeks. So that being said, right, the Bitcoin supply loss. So the last thing is, the first time this cycle, the percentage of supply in loss has reached 50%. The CryptoQuant data shows that the price bottoms during previous cycles normally occur when the percentage of loss reaches 50% or more. So if we're looking at this here, every time we hit the supply loss of about 50%, that indicates the bottom for the market for Bitcoin before we have some type of relief rally. So the current data shows the highest percentage of losses at 52% on the daily chart, 50.4% on the weekly, and then 48% on the monthly. So that's the crypto quant on-chain metrics. But I got one more thing for you guys, and that is, why is it likely to rise above 22,400, which I mentioned earlier when we were looking at the charts? Why are people calling for this? Well, besides the supply of Bitcoin, right? We saw a lot of 30,000 Bitcoin is nothing to shake a stick at coming off exchanges, 60,000 coming off exchanges in 3 days, 30,000 being in 1 day. We're seeing these other 4 on-chain metrics. We saw the Federal Reserve get called by the United Nations the other day, which was actually just yesterday, about halting increases in the interest rates because the rest of the world is struggling. That is going to obviously affect Bitcoin's price. If the interest rates stop or start reversing, there's going to be a good bullish momentum for people to start flowing more money into risk-on assets, that they deem risk-on assets like cryptocurrencies, which will push Bitcoin's price up. And at the same time, we're seeing, like I said earlier, Bitcoin being pulled off exchanges. So somebody knows something. But here's another thing that's happening with Bitcoin: the level of Bitcoin on exchanges. But before we get that, here in the Dixie, right, the Bitcoin versus the dollar has been on this sideways range on the daily for a long time, and we're at the bottom of the range right now. Could we break below? Yes, but this range, the longer you stick in it, the more likely you're going to range through the whole thing. So coming down here to the bottom of this range could show some very strong support, and we can start making a move up. But this is not what I really wanted to cover. What I really wanted to cover is this right here. Bitcoin on exchanges falls below 9% for the first time since November 2018. This is massive. The supply of Bitcoin is running out on exchanges. It is below 9%. So there's tons of people, institutions, whales, whatever they are, that are holding on to their Bitcoin and possibly stacking up more, like we saw. In fact, over 30,000 Bitcoin has been transferred from crypto exchanges to whale wallets in the last 3 days. That was from September 30th. But we know from the earlier article that there was in total 60,000 Bitcoin plus were moved in 3 days, and 30,000 were just in 1 day. So the overall look here is that things are going to be changing. What's the word? Things are going to be changing very drastically here for Bitcoin in a short period of time, right? If you've been paying attention to Debate Crypto at all, on TA Thursdays, every Thursday we bring on massive, great panels filled with TA experts, and we've talked about a move to 30,000, mid 30s, right? Doesn't mean we can't come back, but this could be this setup for this move, the catalyst events that we need for this move to occur. Midterm elections. We've got the Federal Reserve being called to halt increases. 30,000 Bitcoin being moved in 1 day. 60,000 Bitcoin in total being moved in 3 days. We're talking about the on-4 chain metrics, the hash ribbons, the hash rate, the supply of Bitcoin on exchanges in general. Guys, these are all massive indicators for Bitcoin bullishness. Even though we're in a bear market, doesn't feel like these bullish indicators could push Bitcoin up, but that's what they want you to think, so you don't catch the bottom, so you don't dollar cost average in, and they just make you explode in price, and then they make you follow and buy up the hype at the top, because that's what they want you to do. They want you to buy tops, they want you to sell bottoms. Obviously, nothing here I'm saying is ever financial advice. I'm not telling you to go out and buy Bitcoin. I'm not telling you, hey, the bear market is over. That is not what I'm saying here. I'm just saying there is very good chance that we could see a recovery here, whether it's short-lived or longer term. We don't know. Could it happen tomorrow? Could it happen next week? Could it happen a month from now? I don't know. That's not what the indicators are saying. The indicators are just saying that there is a good possibility that we could see a recovery. This is not financial advice. Once again, not financial advice. Go do your own research. I'm just bringing you my opinion on what I'm seeing for Bitcoin. And if we know if Bitcoin moves, the rest of the crypto market moves along with it. So guys, like always, do your own research. Keep on the good fight. The blockchain crusades continue to fight. Fight. Don't ever stop. Don't ever give up. Freedom is here. Thank you for Bitcoin, and thank you for being your own bank. So until next time, guys, see you.